Amazon has announced a 20-for-1 stock split, and along with it, a 10 billion share repurchase program. After trading sideways for almost close to 1.5 years now, should you be excited at this news at all? In today's video, I'm going to tell you all you need to know about the stock split along with the share repurchase program, and at the end of the video, I'm going to calculate the intrinsic value of Amazon for you so that you know whether or not to jump in Amazon as an investment right now. Make sure to leave a like and subscribe to the channel for more exciting information. Now, upon the release of the announcement, the stock price of Amazon jumped up from a closing price of 2,789 to an opening price of about 2,912, and it does receive some sort of a bullish momentum or bullish sentiment after that. Fundamentally speaking, a stock split shouldn't affect the underlying value of the stock at all. So how much is Amazon really worth? We will have to find out at the end. Now, the stock split does have some of its perks. For a company with a share price that is as high as Amazon, being in the 3,000 range, having a stock split will bring the price down significantly. Now, assuming that the share price is at $3,000 on the day of the split, doing a 20-for-1 stock split will bring it down to just $150 per share. And this might just help it to get into the Dow Jones Index. Now, the Dow Jones Index is a price-weighted average, and you can see from the list of their stocks in the index, having a share price of $3,000 will make it significantly overweight if it is to be included, and there is no way for Amazon to get in. Now, with a share price of 150, it may just be suitable weight in the index. Now, if it does get into the Dow Jones Index, what this means is that funds and institutions may have to buy up Amazon to be part of their holdings as well. So this does create some sort of a demand if Amazon can get into the index after the stock split. But after all, these are just a speculation and not a confirm. Whether or not it will do any justice or benefit to Amazon, we will have to wait and see after the stock split. Secondly, by splitting down to $150 per share, there will be huge benefits for the option chain of Amazon. Now, if we go over to the options of Amazon right now, the bid-ask spread is pretty wide. Now, just take a look at the at-the-money options, let's say expiring 12 days out. Now, an at-the-money option easily can have a bid-ask spread of about $4, and that translates to $400 in just one leg of the option contract. That is because there is not much liquidity in this options contract. Each option contract controls 100 shares, and therefore, other than vertical spreads, not many retail investors will have the cash available to do a cash secured put, or not many investors will have the 100 shares to do a covered call. So therefore, the demand for these options pretty low compared to other lower price stocks such as Apple. For Apple, their at-the-money options just have a spread of 15 cents, and that translates to just $15. Alright, and lastly, one of the perks for splitting into smaller shares would be that they could then better compensate their employees with the shares of the company. What I've just mentioned are just 3 small little pointers that serves as the perks for the stock split. And personally for me, I'll be looking forward to the higher liquidity in the options of Amazon after the share split. Next, what about their share repurchase program? Does it have any benefits at all? Theoretically speaking, a share buyback program should be good for the company, and this would be even better if the company can execute it at the correct time when the share price were low and below their intrinsic value. This will create most value for their investors, because when they buy back and retire their share, each of the shares that are remaining in the market right now will have a higher percentage of the company and will have more value overall. But however, looking at how Amazon's conduct their share repurchase program, I personally am not so excited about this news at all, because they already have an ongoing share repurchase program previously, valued at $5 billion, and this was authorized in 2016. Now look at how much they have purchased. They have purchased only less than half of the authorized value of 2.12 billion shares. Right, and it did not buy back any stock in 2019, 2020, or 2021. So all of these 2.12 billion was almost purchased in 2022 alone. Now, even though the stock price is at its low right now, Remember that the share repurchase program previously was authorized back in 2016. And look at how low prices were back then and how much time they have to accumulate and buy back shares, but they did not. Right, and even in 2019, when stock price was at their low most of the time in the consolidation phase, as well as in 2020, they did not buy back any shares at all. From their management of the share buyback program, I would say that it is not being carried out effectively. And that is the reason why I wouldn't be that excited in their 10 billion share buyback program at all. I'll be calculating the effect of this 10 billion buyback on their intrinsic value shortly later. Therefore, the next question would be, is it a good time to get into Amazon right now? You could be coming at this from two different perspectives. One of them from a trading perspective, where you just want to ride out the news of this stock split. What you could do would be to get in now, write the bullish sentiment that comes with the stock split, and get out just before the stock split or immediately after the stock split. Now, after all, Amazon is not the first company to have announced a stock split during this period of time. Previously, there is Tesla, there is Nvidia, and there is also Apple. And if you go to look at each of their charts, from the time where they announced their stock split to the stock split itself, prices have jumped up significantly. This is where the stock split occurred, corresponding to the purple symbol on the chart, and this just occurred a few days before the peak was made. Right, and before that, you can see that prices have been very bullish. So there was a bullish sentiment that come along with the stock split announcement. So this is Apple. If you look at Tesla, the same thing applies. The day of stock split is being marked out by the purple icon, and this corresponds to just a few days before the peak was made again. Before the split announcement, there was a bullish sentiment to the stock as well. Lastly, let's look at Nvidia. So likewise, same thing happened. Stock split this time around, prices came down just before the stock split itself. Stock split was at the low, and prices peaked a few days before. Right, but nonetheless, when the company announced the decision, for the months prior, stock prices have been rather bullish overall. Now, we do have a negative example, and that is in Google. Theirs are to come in July this year, but however, we have yet to see any bullish movement in the stock price of Google at all. The stock price of Google is still in a consolidation, and this could be due to the overall market sentiment right now. So the same for Amazon. If you go back to Amazon right now, would you expect a bullish sentiment to come along with this stock split announcement? My take would be that the bullish phenomenon could still occur, but that would have to wait until the current bearish sentiment in the overall market have died down. Once all these have tied over and tied down, we might have a chance to see the bullish phenomenon in the stock prices. But we are running out of time because the stock split for Amazon will be occurring towards the end of May, and it will start trading in June. So from now, there is still slightly less than 2 months for the overall bearish sentiment in the market to die down and for the bullish phenomenon of the stock split to take over, to carry Amazon prices up higher. And if it does indeed happen, then you might want to take note of these resistance prices over here and exit when prices show a sign of resistance at these levels. Next, as an investor, should you get into Amazon at these prices? To answer that question, we will have to take a look at the intrinsic value of Amazon. This is a 20-year intrinsic value for Amazon. And to calculate that intrinsic value, we will first need to input the relevant performance figures for Amazon itself. And to get them, head over to one of the super websites that I would like to introduce you guys to. And that is roic.ai. It displays all the key fundamental financial data for the stock. And first figure that we are interested in is the cash flow from operations. So for that is just displayed over here. Cash provided by operating activities, and you can see we have a plethora of data all the way going back to 1996. Right, so all the historical data is here for you to analyze, for you to use. And for 2021, they are bringing in a total of 46,000 million cash from their operating activity. So that is inputs here. For their growth rates, we can head over to FinViz to get the growth rate next 5 year from the earnings per share projection. is at 34.8%. So that is what we have entered. And then we just assume that it flatlines out to 15% for the subsequent year 6 to 10. And for growth rate of 11 to 20, let's just say that it will be growing at the US GDP growth rate. So maybe 3% or 4% for that. And for the discount rate, we will have to refer to the table over here. For that, we need to take into account the risk-free rate of the market right now. Risk-free rate, we can just simply go over to use the 2-year treasury rate. A few days ago, it was at 1.63%. Right now, it has just shot up to 1.75%. So just key in and edit accordingly. I won't be making the changes now. And for the market risk premium, the market risk premium of the US market is at an average of about 5.5%. So that is what we have used. Subsequently, this is the table that we have got corresponding to the beta value of the stock. And if you go back to FinViz, we can see Amazon is having a beta of 1.12. And we will be using a discount rate of 8.2% for it. And for shares outstanding, we go back to the super site, ROIC.ai, and we can see the weighted average shares outstanding is at 505 million. You can cross-check this with the FinViz. FinViz is slightly higher at 509, so just use whichever value that you deem fit. I'm going to use 509 over here. And then lastly, cash and short-term investment, we can also head back to ROIC. It is basically just cash and short-term investment, 96,000 and 49,000. And lastly, the long-term and short-term debt. Just scroll down. Short-term debt, Amazon has none. Long-term debt, it has 106,000 million. So those two numbers will be what we will be keying in into these two cells respectively. And then the calculator will output a final intrinsic value of $5,383. And compared to the current price right now, it is sitting at a discount of 46% to the intrinsic value. Alright, and if we change it up, revise it to 20%, it'll be at 3.1 thousand. So meaning to say, given the current stock price of Amazon at 2.9 thousand, we are saying that Amazon is going to grow at 20% for the next 5 years, and then subsequently 15% for year 6 to year 10, and 3% for year 11 to year 20. And if Amazon grows at this rate, you will have the intrinsic value of Amazon to be as such. So it is up to you whether this value seems credible for you. If the growth rates are too unrealistic to you, then revise it down by all means and get an intrinsic value that suits your own investment risk appetite. Alright, so now I'm going to demonstrate to you that a 20-to-1 stock split will not affect the underlying value of the shares at all. Right, so by doing a 20-to-1 stock split, basically their shares outstanding right now will be 509 million multiplied by 20. Now you see how the final IV drops accordingly to now only $155. And previously we have calculated that if we assume the stock split, 20-for-1 stock split occurs at a price of $3,000, post split will be worth $150. Right, so therefore, in relation to its intrinsic value, the stock price is still undervalued, no matter how many times the stock split occurs. Now let's answer the last question for today's video. How will the 10 billion share buyback program affect the intrinsic value of Amazon? Now for this, we will have to do some assumption. Let's assume that as soon as the share buyback program is authorized, they are going to utilize all the 10 billion at once. Right, so this is a bit far-fetched, but let's assume so, and let's see how much of an impact it will have. The next assumption that we will make is that Amazon will be at a price of $3,000 for holistic sake at the point of the share buyback. So let's first calculate how many shares can 10 billion buy us. So if we take 10 billion divided by 3,000, now they will be able to afford to retire 3.33 million shares out from the market. Meaning to say that their shares outstanding will be now from 509 to 506, or even maybe 505. Let's just be more generous, right? And you can see the 10 billion share buyback program would not affect the intrinsic value much. Before it was 3,103, and after it is just 3,127. So just a $20 jump. Once again, that is another reason why I'm not so excited about the share repurchase program at all, because it is a very tiny amount compared to the whole market capitalization of the company, and I wouldn't trust the management to execute it effectively, as what have been seen from their previous share repurchase program. Right, so if you guys have any questions, feel free to leave them down in the comments below, and I'll be happy to answer any of them. If you find today's content helpful, please leave a like and subscribe to the channel as a form of support for the content that I provide for you guys. And make sure to turn on the bell notification so that you receive instant update on when the next video is available. Now that we know Amazon is below its intrinsic value, if we use a growth rate of 35%, in the next video, we will be addressing the question whether Amazon is still a fundamentally strong company for you to invest in. We will be analyzing the fundamentals of the company and take a deep dive into that. So I hope to see you in the next episode. Thanks for watching and goodbye.